Good day, and welcome to another one of our Ransom's weekly updates. As usual, what we'll do is we'll cover three stories that were in the news this week and end up with a little AI segment, just looking at what the latest developments in the AI world. Okay, starting up with our three stories this week. A little update on the Russia-Ukraine situation, looking at a move, the latest minutes from the US Fed, and finally doing a bit of a deeper dive into what's happening in China versus the rest of the world at the moment. And in the AI space, we'll talk a little bit about some of the moves that have come through with regards to not just investments, but also some advancements coming through as well. Okay, let's look at, first of all, what's happening in Russia and Ukraine at the moment. Basically, the Ukrainian counteroffensive has had some gains, but very minor gains. We're talking a very big country, and the gains so far have been like hundreds of kilometers, square kilometers or so. There is hope that there'd be a bit of a move against the breakthrough line, get some kind of trophy of some kind. The Ukrainians really want this because what that would do is it give them kind of like a way to go to the Western partners and ask for more weaponry, because that would mean that there's a hope for them to succeed. The Russians, however, thus far, like I said, have been punching above their weight in terms of, or at least what we expected them to do. In terms of the counteroffensive, what has happened is that the Russians have created a bit of a crumple zone, a bit of a little kind of buffer zone before their first actual lines are, and the Ukrainians are having trouble break through those buffer zones first to even get to the first lines of defense. And so it kind of makes sense in this war. The attackers have usually been at a much have had a huge disadvantage basically in this particular war. The defenders have usually done much better. When the Russians were attacking, they were doing much worse, and the Ukrainians were doing better. Now the Ukrainians are attacking, and it seemed to be the reverse. The ratios, are flipping basically. Where previously more Russians were dying for every Ukrainian, now it looks like more Ukrainians are dying for every Russian. That is the way of this war. Okay. Now, one bit of bad news here, and one thing that I think is worrying me, quite frankly, is what's happening with regards to some of the announcements around, like further threats of further, escalation. Both the Russians and the Ukrainians are accusing each other of trying to blow up a nuclear power plant. That is the latest thing. Now, there's been a couple of these things. There's been the blowing up of that dam. There's been the blowing up of that pipeline. The pipeline was probably the Ukrainians. The dam, I'm leaning towards the pipeline was almost certainly the Ukrainians or the Western powers. It was either NATO, the US, or the Ukrainians, but almost certainly not the Russians, the pipeline. The dam is probably, if I put odds on it, 2/3 likely the Ukrainians / their allies, 1/3 the Russians, in terms of likelihood. It does seem that the dam, which was being burst, benefited the Ukrainians and hurt the Russians a bit more. Okay. Now, when it comes to this particular thing, again, dispute about who's going to do this or who's got the most incentive to do something like this here. But I would think that, if this does happen, we don't know for certain if it's going to be the Russians or Ukrainians. But what I do know for certain is that if there is a nuclear power plant that is blown up, the knock-on effects are going to be huge for the globe. Many of you may be old enough to remember Chernobyl, which is also, by the way, situated in the Ukraine, a power plant that went more through incompetence. This time around, it would be malice, of course, but same kind of result, I would think. And that resulted in like a radiation cloud going over through much of Western Europe, and obviously causing a lot of uncertainty in those countries. And if anything, I think it'll be a bigger impact right now because people are more afraid of these kind of things than they were in the past. So I'm really expecting that if there is something like this happening, that you would have a knock-on effect that would have impact on financial markets. And not to talk about the impact it might have on the actual escalation in the war, because once anything nuclear is brought into play, I mean, Russia is the world's largest nuclear power. It is a very scary thing. And we don't want to be thinking that, we want to keep that particular, possibility as a total taboo. Like no one can use it, because that's pretty much what's prevented the world from being destroyed over the last 80 years. Okay, so that's the Russia-Ukraine situation. The next thing is Jerome Powell and the Fed minutes. Basically, what we learned was the Fed is a bit more hawkish at the moment than we had anticipated. There were still people arguing for a rate hike last time around, but they accepted the pause. But there's virtual consensus that we're going to have a hike coming through for the next meeting, and maybe even one thereafter. Okay, and the members of the Fed board here basically are all in agreement of more hikes being required. Okay, the market right now is still talking about the possibility of rate cuts in 6 months' time. That is something I think that is pretty optimistic, though I don't know if it's totally out of line. I personally have also been that camp, quite frankly. We are seeing signs that the US economy is slowing down. We are seeing some issues coming through that are indicating that inflation is under control. There was actually deflation for producer prices in the Eurozone in the last period. So yeah, if inflation is going to deflationary at the factory gate, it's going to eventually feed through to lower inflation at the consumer, meaning that we don't need as much, in terms of rate hikes. So that is an important factor to put into there, that we are seeing more, I think, of a stiffer spine from the Fed than had been anticipated. However, at the same time, some of the external factors like the actual results coming out, etc., from economies indicates that maybe we don't really need to have quite as aggressive, monetary policy, stance as we have right now, not being quite as hawkish as we are right now. Okay, and the final thing we're going to talk about this week in terms of the news stories for the general, the global news stories basically, is what's happening in China. Now, this week, China banned, not banned, but restricted the exports of two raw materials, germanium and gallium. Now, most of you have never heard of germanium or gallium. Gallium, by the way, is a very interesting metal. It melts in your hand. It's got a melting point of about 30 degrees Celsius. And if you ever put a drop of it on a soda can, it reacts with the aluminium and just melts it away. There's in fact a little magic trick that you could do, that magicians do, where they take a gallium spoon and they basically, mix or stir a hot cup of tea, and the spoon will dissolve into the tea because, of course, it melts at 30 degrees Celsius. It's just basically lower than human body temperature. So, also beyond the use as a little magic trick, these materials are used for the manufacture of certain high-tech things, such as computer chips, such as fiber optics, and also things in renewable energy like solar panels, etc. We are talking about a lot of money here. In total, between the two metals, or two minerals, we're talking about maybe $250 million a trade, $250 billion a trade or so. Not a really huge amount of money. But the fact that it's such a key component of these technologies means that it could have an impact around the world. Now, I don't expect it to impact chips. I don't expect it to impact the high-end chips especially. The reason being is that, look, we're talking about a small amount of money. A company like, for instance, NVIDIA is worth $1 trillion almost. For them to spend another $250 million on something, or this would basically give them the entire world supply. They won't need that. They can easily increase their spend here from a few tens of millions to double that, and it make no difference in their bottom line. So we could expect the high-end producers of computer chips, etc., to effectively be able to buy them what they demand in the market. You might find a bit more difficulty for things like, for instance, solar panels and a couple other lower margin or lower value businesses. But I think the chips industry will probably be safe. That being said, I think this is just a further move in the whole China-US/Western trade war. This is not the end of it. This, in fact, is the second round, I think, of what happened first was the Americans and their allies banned the export of high-tech chips to the Chinese and the equipment to make chips as well. Now the Chinese are saying, oh, we'll ban the raw materials used to make chips, as a countermeasure. I think it's a temporary impact. Longer term, like I said, the Chinese make a lot of the stuff, but they're not a monopoly. They make about more than half the world's stuff, germanium and gallium, but they're not a monopoly. There's other places in the world to do it, and the only reason that the Chinese have really been a success here is not because they have all the ore bodies. It's just because they have the cheapest guys to do it. If there is, like I said, real industrial intervention, industrial policy out there, it makes sense to go out and develop, friend-shoring or near-shoring, sources of these materials. And like I said, because it's such a small market, a few hundreds of millions of dollars a year, which is a small market, you know what I mean? You can easily imagine like a couple $1 billion being spent towards, getting local facilities or friend-shored facilities done that are going to, do this for the Western manufacturers. But I do think it is indicating that this is just a further step down this line of a bifurcated world. You just got to understand that the world in 10, 15 years time is probably going to be more separate than it is right now, changing a trend that we've been experiencing for the last 70 years, where things are getting closer and closer together. More trade, more interaction. I think in 10 years' time, it's going to be less trade than we are right now, less interaction, just because of the fact that we are seeing two big blocks, which is the US and its allies in NATO, and the Chinese and possibly places like Russia, Iran, etc. on the other side. We in South Africa, by the way, are like, one of the things that are in play. Though we are leaning more towards the Russians in recent times, at least perception-wise, we have a lot of linkages with the US, and I don't think we have in any way cut those off at the moment. And we will have to decide, I think, in the near term, which party we're going to sit on, which side we're going to pick. And I think probably the smart idea is to go with the US Western side. Nothing to do with the morality of this or whatever, but just it looks like they have the winning hand at the moment. In Russia, definitely, and possibly even against China. Okay, and now I go to a couple of AI stories that I want to just cover. The first thing is I want to talk about a new development in terms of investments. Over $1 billion being spent on computing chips, basically building a cloud farm for internet also AI applications. But this is done by the former founder of AI. He's gotten over $1 billion in terms of capital coming in. He's going to put 22,000 computer chips together to create a huge facility to train AI models, etc. Obviously, that is the model. The business model, basically renting out your machinery to train out those models. And maybe also your own stuff as well. Like I said, he was one of the founders of OpenAI. Massive valuation. The last time I spoke to you guys, I mentioned the company that had $100 million injection. This is 10 times plus for this particular company. And it just shows that the innovative, or at least the incentive to invest here is quite high. And by the way, some of the investors here are things like, Microsoft, who actually had bought into OpenAI. So they're still willing to basically put more money into other places as well. And I think that's something that I think we have to consider when looking at where to invest ourselves. Huge amounts of money going into like this cloud computing thing. Majority of it towards basically buying the chips, which right now we're at incredibly high prices. I don't know if this is going to be a wise investment in terms of like an outside investor. Maybe as for something like Microsoft that might want to use this facility, it might be a good investment. But for an outside investor, it probably is not going to return a huge amount of capital. So I do think that if you're looking at the real like the gangbuster investment, is probably going to be more software based kind of stuff or IP stuff as opposed to these huge facilities like this. The second thing I want to talk about is a development with regards to AI, with regards to training of AI. Now I've discussed this before to some extent, and I want to just bring it back to give you an understanding of what's happening. When it comes to AI, there's like two big things. One is the computing power, like we talked about just now with this company from the founder or co-founder of OpenAI. The other thing is data. And data has been a huge source of contention because where's the data coming from? We're talking, huge amounts of data and, copyrights involved here, attributing artists and, fair use, etc. All these kind of legal things are coming into play. And we have seen OpenAI recently being sued for this. But a new paper coming out recently talked about, it's called Textbooks Are All You Need, which is a play on the word attention, or the phrase attention is all you need, which is the foundational paper for Transformers, which is the technology that created all the stuff here. So they just want to put a play on that, which is textbooks are all you need. And what textbooks all you need turns out is that if you have very high quality data, like textbooks, you can get a lot of the benefits of training a model without anywhere near the size of input data. So if your input data is perfect, it's very, very high quality, you will get a lot of the benefits that you would get by training yourself with like 100 times more not so perfect data. So just scraping the internet and finding, all the stuff you can and putting that through a huge transformational system and getting a ChatGPT at the end that might have, according to what I've seen recently, apparently the number for ChatGPT is 8 times 222 billion, or 220 billion, sorry. So apparently there's 220 billion parameter models and 8 of them, and they kind of interact with each other. So that would put ChatGPT around about 1.7 trillion parameters. Apparently, by using textbooks are all you need, and apparently just focusing on textbooks, not looking at some of the other stuff, you get a model that performs almost as well as GPT-4. In some cases, better than GPT-4 in terms of accuracy, etc. At 1,000th the size in terms of like data coming in. Tiny fraction. We're not talking about like half the size, a quarter, 1,000th the size. So for instance, if you think the size, determined how much you spent, instead of paying 100 million on GPT-4, you could spend 100,000 on it and gotten a model that would have done almost as well in many tasks and better in some other tasks as GPT-4. So this is an important development and shows that we can't be too certain about what actually is the forward requirements for this technology to succeed. At one point in time, it was like, no, data is huge. Now maybe data is not so huge, especially if the data quality is not great. And maybe the higher quality data is more important than we thought it was. Okay, that's it for me for this week, and I hope to see you guys again next week. Cheers.